Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Friday. It's August the 31st, 2012. We're going to be looking at all the major markets around the globe that we track at PerfectStockAlert.com for you. There's 18 of them total, and we'll go through them rather quickly today because they're all pretty clear as to what you want to be doing. A couple of opportunities that I'm already going to be marking on the charts, telling you that I will be buying them on Monday probably. And then there's a couple others that I'll be watching for the signals. So follow me here. And at the end of the video, I've got an announcement to make. So be sure you remind me about that if I forget, right? Okay. Looking at Australia market to start off with, a nice move to the upside here. We talked about this shooting star signal here. Told you could short it at this point. If you did that, I didn't, but if you did, take your stop loss limit, this was up here, and advance it down to 1 cent above today's high. That's what I would do. You want to notice on this situation here, you've got a high point on this candlestick, a lower high here, lower here, lower here, lower still, and it just continues to do that. As long as that's the case, you're just going to continue in that downtrend. As soon as that stops being the case, you're going to reverse and start going in the other direction. So when you start moving lower like that, just start advancing your stop, and then eventually you will get stopped out, and that will be fine because you will be actually turning at that point to move back to the other direction. The Dow Jones Industrial Average made a nice move back to the upside today. We didn't really think you had a big move to the downside here. In fact, I see a lot of buying opportunities out there, and I talked about that yesterday, earlier this week as well, and I'll show it again to you today. The very last chart I show you today will actually seal the deal for me. The main thing here, looking at the Dow Jones Industrial Average, again, bouncing off the 30 line, the ultimate oscillator. When she hits that, she's typically in the oversold condition, and that's clearly what we just bounced off of there. Also, you got a little bit of selling today on the little wick out here, but I think that is more about the fact that in the U.S. we've got a 3-day weekend here. People just didn't want to hold over that much of a time, but I think it's really still a move to the upside here. You also notice you're finding support at the 50-day moving average here, and previous resistance here, here, and here. That line right there is what you're really bouncing off of. So that previous resistance is now acting as support. Makes sense there. So all these things tell me to look for this guy to bounce to the upside. I don't have a hammer candlestick formation here, so we may see a little bit more move to the downside before we actually reverse. I couldn't tell you, but in any event, I wouldn't buy it here, not this particular average, because I like to buy off of a hammer candlestick like we had over here. Without that, I would let it pass. However, I'm sure there's individual companies within the average that you could find the right signal, candlestick signal that you could actually use on that scenario. Okay. The French CAC 40 index, she's just moving sideways. Really nothing here to report to you. We tried to go long here, get a little bounce the next day, but then we were stopped out, and I just leave it alone at this point. We don't know whether she could actually pull back a little bit more before moving higher. I don't see a lot of downside potential. I think if you did have any move to the downside here, it would find support, being that you would be touching on the 30 line at that point on the ultimate oscillator, and you'd also be finding that support at the 50-day and the 200-day moving averages there. So these are all signals that I would not be looking for this to make a big move to the downside, but in fact be looking to find support real soon. Also, resistance here and here is now going to be acting as support. All these things come into play at the same area, and therefore, again, I don't see a big move to the downside. A quick look here at the MIB, the Milan Index here. You can see that we basically got the same story. We talked about this before. Resistance here, and that's going to be acting as support, which you saw here, and now again you're seeing it again here. Your ultimate oscillator is at 50, and I'm not really impressed with that. I wouldn't be a buyer of this, but I wouldn't be a seller either. Just let this one go for the week. I'm just not going to pay any attention to it. If I get a nice oversold situation or a breakout scenario, something like that, maybe then, but I could find better charts basically. So this week I'm just not going to be all that interested in the Milan index. I'm sure those of you guys that do trade over there, you can find individual companies within the average that, or to make up the average, that would be much more effective for you than this chart. The German DAX composite, same story as the French markets. We've been stopped out here, and this is just continuing to move sideways. I would, again, not be entering at this time. Just continue to watch this guy. Gold was a moneymaker for anybody who watched the video we talked about earlier in the week. We were talking about this high point here as a sell signal there, and you started to continue to move lower the next day. The next day, note the high points and low points consistently lower each time. And we told you during this time period that you want to be watching for that reversal. Sooner or later, you're going to get a scenario where you're going to break out above that high point, and if you did that by even 1 penny, that you want to be a buyer at that time and then set your stop off the low. So that means that today you would have been a buyer here with the stop set here. advance this stop as soon as the next candlestick formation closes. Just start advancing the stop to the low of each candlestick until you eventually are stopped out. But right now, you should be long gold moving higher. The Hong Kong Hang Seng Index. This one's been in a nice pullback here, but I believe it's a buying opportunity if you can spot the right situation or right timing for that. Right now, I think it's really close to be developing. We may mark this chart later in the week for actually finding a good quality buy. Right now, we're still seeing a lower low today than we saw the previous day, so it's not time to be buying this just yet. However, we know it's close. We know that for several reasons. Number one, you've moved up here, you hit resistance, you bounced off. You hit up here, resistance, bounced off, resistance, bounced off, resistance, bounced off, broke out. Now we've pulled back. Previous resistance is going to be acting as support. So this area right here is actually support. Even though you're selling below it, it's temporary. Also, you've got the ultimate oscillator down here at 33. Remember, at the 30 line or below, you're getting extremely oversold. You'll be looking for those bounces again. Also, with the 50-day moving average trading below that point there. All these things tell me to be looking for a buy opportunity in this next week. The India Bombay Stock Exchange, or the BSE, basically tracked out the same overall kind of pattern that we've seen on the Asia's market, or the Hong Kong Hang Seng market. You can see the higher highs, higher lows. Right now we're getting a pullback here. As long as this low develops anywhere above this line right here, it'd be a buy opportunity, because you would have a series of higher highs and higher, wherever it will land, lows. Therefore, you're going to be a buyer looking for a test of the previous high. At the moment, I wouldn't do it, but it could develop anytime next week, and we'll be looking for that opportunity. Looking now at Japan iShares of the EWJ. This one you may be able to buy on Monday. Depends on what happens with the market, right? I mean, with this particular average here. What we've got going on is a previous little move here, and here, higher high, pulls back, and we're still seeing low point, higher low still developing here. Also, we have a long leg doji. Dojis typically happen at tops and bottoms. So again, here's a doji over here. You find those at bottom, seeing another one here. About the same time, you should be expecting to see a bottom, because your ultimate oscillator is down there below the 30 line, or bounced off of that point there. So we should be expecting to see some signals of a reversal here, and that's why it catches my attention when we see a doji formation here. When I say that you could be a buyer tomorrow, it would depend on whether or not, on Monday, it would depend on whether or not you take out this high point. If you took out that high point, even by a single penny, then yes, you could buy it with the stop set off the candlestick's low and then start advancing that stop, so forth and so on. We'd mark the chart once that we saw it actually confirm it, but right now we're just watching for that reversal. We would expect to find that sometime next week. Looking now at the London Financial Times Index, or the FTSE, you can see that we have a nice little rollover pattern right here, pulled back down, an inverted hammer. Remember, at the top of the pattern, it's a shooting star. At the bottom of the pattern, it's actually the exact opposite. It's telling you the exact opposite information. It's telling you look for it to bounce, and that would make sense for multiple reasons. Again, ultimate oscillator pulls down here to the 30 line, looking for a bounce there. You've also got this 50-day moving average finding support there, and a 200-day moving average right below that. That's where you should be looking to find that support at. Also, resistance, and all of that was broken out, and therefore, when that broke out there, it became support. So all that information there does tell you the same thing. Look for it to bounce here. We're not long in this situation. You'll notice that we saw the potential signal here. We told you if the following day, whenever it's a black arrow, it just basically means if the following day were to actually give you a higher high, then I would buy it. But in this case, we didn't get the higher high. Here was the high point, the next day was lower, and so forth and so on. So we obviously wouldn't trade into that. We didn't touch it, and now she continued to go lower. But she started to form some more signals like she wants to reverse here. So if we get the right signal, I would mark the chart. Otherwise, I'll just let it pass. Looking now at the NASDAQ here in the U.S., basic same story we've seen all week long. This just kind of moving sideways, not doing much of anything. I'm really not concerned with this right now. There are individual companies or individual charts that you can find that make up the individual average that could actually be used, but this particular chart here, you don't want to buy it when it's in consolidation form. You want to buy once it gets a breakout, starts moving higher, or when it starts to break down and start moving lower. I wouldn't trade a breakout in this scenario, because you have previous resistance here, that's been broken through. Now it's going to be support, so a breakout to the downside wouldn't have a lot of room before she just bounced and turned around and started going higher again. So again, there's nothing really here I can use if it's time, but again, this chart is not bearish looking in any way, shape, or form. Looking now at the oil index of the XOI, basically just consolidating right here, moving sideways. May have a little bit of a downward slope to it. If you wanted to analyze it that way, that's fine too. In any event, it's just consolidation. You can tell that from multiple different things. The fact that she's not actually moving anywhere, yet the ultimate oscillator is still trending down here, so she's becoming less overbought as she moves sideways, so she's preparing for a move. In which direction? That's right, up. Looking now at the UUP, the U.S. Bullish Dollar Index Fund, you can see that we've actually got the previous support was right here, and we've broken through that, closing well below that now very substantially. So I wouldn't be a buyer of this scenario here, no matter what signals that I got. So I wouldn't short at this point either. I want to short after you got a nice bounce, but I don't want to be a buyer right now. Just let this chart pass for the week. We talked about the Russell 2000 Small Cap Index in pretty good detail last week, and we're talking about this being the basic line in the sand. Right here is what you want to watch for. When you get a close above that line at about 821, that's going to be your buy signal there. Right now what you have is a little formation. It looks like this little cup, and right there it could be a saucer, a cup and handle scenario, however you want to refer to it. But in any event, it's the breakout above this point that you're actually going to be looking to be a buyer there. Then you'd set your stop. Also, you could take the distance between this here down to the low point, measure that out, and from the breakout, add that to that point, and that gives you an idea of how high she's going to go before you start to find resistance again. Again, that's just a target, but it's one way of actually analyzing that particular chart formation. The S&P 500 Large Cap Index, a really boring chart to watch. Basically, you've been in an uptrend going higher highs, higher lows, like this kind of scenario right here. And then from this point here, we just kind of went sideways. I can't draw. And so that's all we're really doing, staying right there. And just like the NASDAQ chart there, you're consolidating. I wouldn't be a buyer here, and I wouldn't sell it either. We started to back here because we saw the shooting star formation, overbought condition. Then we started to move lower, and we didn't like how she was trading to the downside. It looked like she was going to end up just moving sideways, and that's exactly what happened. So we were glad to cover that short position and just let it move sideways without us. Silver, like we talked about earlier this week, we didn't actually want to trade this one. We preferred gold over silver. However, silver is going to track gold price activity, basically, not penny for penny, but it will basically do the same thing. So if you are long silver, that's fine for you. Continue to advance your stop as you go, and be looking for taking a profit at some point in time, because no average goes straight up. Keep that in mind. Don't matter what the news may come out and tell you later next week or whatever. Just follow the rules, advance your stop, you will eventually get stopped out. The Toronto Stock Exchange, the TSX, this one is of interest to me as well. I've marked it with the black arrow indicating that if the following day gives you a higher high than one penny higher than today, I would be a buyer there with a stop set off the low candlestick there and then start advancing that move higher. You've got resistance here, 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 and then you finally broke out of it here. So that resistance is now going to be acting as support. That doesn't surprise me that we're starting to find support here. Also, you'll notice that we pulled back down pretty close to the 30 line, the ultimate oscillator there. All these signs tell me to start looking for a bottom here. So the fact that we're starting to see the development of the long leg doji or a doji formation, however you want to refer to it, makes sense. So that's why I'm looking at that as in that scenario. You also notice there's a pretty consistent trend in every one of these charts that I'm showing you. They're all bullish one way or another. Maybe there's a little bit more selling in one than another. Maybe there's a little bit better buy opportunity in one or the other. But they're all consistently opportunities to looking to go long the market, not short. At least that's what I'm seeing. So those guys that are out there telling you to start shorting this market are going to be kind of caught off guard. The last chart I want to look at today is going to be the VIX. We talked about this yesterday in some detail. Again, this runs the inverse of the S&P 500. So if you were looking at the VIX as being bearish, you'd be expecting to see a bullish scenario on the S&P 500 and vice versa. I would actually short the VIX, even though I don't see anything that I want to play immediately on the S&P 500 on the long side. I do want to short the VIX here, and here's why. You'll notice you pulled up above the 70 line, the ultimate oscillator. That's right up there, and that's where you expect to find overbought conditions and where you expect to be finding short. It's a downtrend. It means you've got high points that are lower than the previous ones and low points that are lower than the previous ones. That means you're in a downtrend, which we are here. So any bounce to the upside, you want to look for a short opportunity. In this case here, you've got a couple different scenarios that you could play out, but in any of them, they all have to test this low point down here in order to even reverse the downtrend. So if you haven't even done that yet, you know that's something that's going to happen. The one bit of information here that you're going to notice difference on this chart than I typically do on others. In this case here, I put the stop loss limit about 1926. $19.26. That's where I put my stop at here. I've done that for a couple of reasons. Number one, it's nothing wrong with it. It's absolutely it's proper. What you're doing is you're basing it off the previous high here. So let me draw this out. Here's this high, lower, low, and then a high again. Now, as long as those high points are lower than each one before it, then you're still in the downtrend. When that starts to change is when you start to get a high point that's higher than the previous. Then that would start to change, and you wouldn't be bearish anymore. You start questioning whether or not the trend is changing. Right now, we're not seeing that, so what I'm doing is saying I would short now with the stop set off the previous high over here. That's why my stop is where it is. And the reason why I do that on the S&P, I mean not the S&P, with the VIX, is because a lot of times once you get the signal, it's too late. All of a sudden, the next market day, you gap down, so the trade's over and you miss it. That happens to me over and over again on the VIX. So this time around, I'm not going to do that to myself. I'm going to let it rally up here like it has and say get short here with the stop set off the previous high. Okay, the last little bit of information I want to give you at the end of this video here, just an announcement, let you know that we have updated our free website at perfectstockalert.com. It's right there. We brought out the new version of it there, and all the information that you will need is already there. There's a couple of items that we haven't actually finished, but we're still working on them. And I believe there's a glitch in the message forum, but we're working on that as well. So I just want you guys to know that we have the new website up there. I want to thank you guys also. It's the end of the month. I want to thank you guys for sharing our videos online, referring your friends. That support allows us to keep giving you this free stuff, this free services, and keep adding to the free service. And there's a lot we'd like to do, even more. And as we grow, we'll be able to continue to give you more free stuff. So thank you guys for your support. We are building this together. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.